Hey, what is up everyone? It's David here. A good friend working in CrowdStrike introduced me to the world of cybersecurity. Not to mention, Palantir was a non-stop topic in my Discord for weeks. So when NUIX went public, I naturally took an interest. So in this video, let's talk about the NUIX IPO, whether if it's worth your attention, and I did make a few changes to my portfolio as well, so I'm going to share that with you towards the end of this video. As usual, this video is not financial advice or recommendation to do anything. Just general information for entertainment purposes only. So without further ado, let's go! I've broken the NUIX IPO into three main parts. First, I'm going to talk about an overview of the business. Then I'm going to talk about the financials, and then I'll wrap up this segment with some commentary around the management team. I've kept everything as simple as possible, but if there are any concepts that's confusing, just let me know in the comment section below and I'll clarify. At the time of recording this video, NUIX is trading at $8 per share with a 2.5 billion market capitalization. Now, NUIX is an investigative and intelligence software as a service company. That's a loaded sentence, but what it basically means is that the software is built to help organizations that identify trend and patterns within different types of data. In the past, if the Royal Commission is investigating into the misconduct of banking, there will be people actually reading into the emails, texts, or even recorded phone calls in order to build a case. It's incredibly labor intensive and really slow. With NUIX, the unstructured data like emails, text messages, recorded phone calls, or even your browsing history can be processed at high volumes and incredibly efficiently into a searchable dataset. Since this is a software as a service company, they generate revenue via a subscription model. And so far, they have 1,000 customers worldwide. Their customers include Amazon, the Big Four accounting firms, or even government agencies like ATO, ASIC, SEC, and even the US Department of Justice. For their financials, I took the liberty to pull out those numbers just so that it's easier to read. Feel free to dig into their numbers, but for me personally, the highlight was the 88 to 89% of gross margin and the above 100% net dollar retention rate. High levels of gross margin give them a deep pool of resources to continue investing in R&D and enterprise salespeople, both of which will continue helping them refine the product and expand into new enterprise accounts. The good news with the net dollar retention rate above 100% is telling us that existing customers, taking into account upgrades, downgrades, and people no longer using NUIX, is spending more this year than the previous year, which is a hallmark of a great enterprise SaaS company. As it stands, net dollar retention rate seems to be fluctuating, and I think that the pandemic might have impacted renewals, so I'll be keeping an eye on that metric moving forward. Now, if you watched my Megaport video, then you know that with enterprise SaaS company, one of the metrics that I dig for is sales efficiency. With this sales efficiency metric, what I'm trying to understand is with every sales and marketing dollar that was spent in the previous period, how many dollars of gross profit is it generating in the current period? Now, the easiest way to calculate sales efficiency is just to take the current year's gross profit divided by the sales and distribution expense. And as you can see, for every sales and distribution dollar that was spent by NUIX in the previous period, is generating $2.34 of gross profit in FY19 and $2.82 in FY20. The improvement of sales efficiency is basically telling us that the company is starting to nail messaging, or they've hired some really great enterprise salespeople. And the above 100% net dollar retention rate is telling us that there is a level of product market fit. Otherwise, their customers would not be staying around, which could push that net dollar retention rate below 100%. Of course, it's even better that they are already profitable and cash flow positive at the point of going public. It's just a breath of fresh air when we get a company that's actually making money. If we take a look at their balance sheet items, as of recording this video, post-IPO, NUIX will have a total of 129 million current assets. 67 million of that is straight cash. And having $67 million worth of cash means that NUIX can take the opportunity to acquire companies to grow faster if the opportunity is right. With a 75 million total current liabilities, their current ratio is about 1.72, which really just means that they shouldn't have any issues withstanding external shocks in the near term. And if you dig deeper into the balance sheet, part of the capital that was raised in the IPO will be used to pay down their debt. So post-IPO, NUIX will have no debt. Well, that sounds all good in the hood, right?
No.
As ridiculous as it may sound, since critical government agencies are customers of NUIX, it immediately makes them a massive target for cyber attacks. The good thing is, NUIX, being a provider of cybersecurity solutions as part of their product suite, will significantly reduce the risk of cyber attacks, but it doesn't eliminate it. On top of that, the biggest risk for NUIX is whether they can continue to sell to people who don't speak their jargon. So far, over 42% of the staff is in sales and distribution. Not to mention, NUIX can also sell their products through their partners indirectly. A good example would be the Big Four accounting firms leveraging NUIX to provide services to their client, or even teaching their clients how to use NUIX to solve problems internally. The question is, can NUIX continue to sell to their enterprise customers to grow efficiently? That we'll have to wait and see. From a management team perspective, I'm sorry I'm going to butcher some of the names, David Siski is leading the R&D efforts as a chief scientist, whereas Rod Wardry is the group CEO leading the commercial side of things for the business. The rest of the leadership team is incredibly deep in domain expertise. Whether that's engineering or enterprise sales, NUIX just seems like an incredibly well-oiled machine. And you really don't expect anything less when over 60% of the company is owned by Macquarie Group before it went IPO. Post-IPO, Macquarie Group got their payday, sold down their stake from about more than 66% to about 30%. In saying that, this is no longer a founder-led/owned company. And for those of you who have followed me for a while, I have a personal soft spot for founder-led and majority founder-owned companies because this is their life's work and they will do whatever it takes to realize that vision. Nonetheless, I am really intrigued by their efficiency and net dollar retention rate, so I've decided to put them on my watch list. Plus, I really think their IPO prospectus is such a great piece of study material. As many of you know by now, Salesforce recently have decided to buy Slack out in a $27.7 billion mega deal. My original investment thesis around Slack was the network effect between enterprise customers, their app ecosystem, and of course, the co-founder Stuart Butterfield. It never really crossed my mind that Slack was going to be an acquisition target, and maybe that just indicates my lack of depth in mergers and acquisitions. But once that deal was announced, I decided to exit my entire Slack position, since if Salesforce is going to buy them, I would need to do my due diligence on Salesforce. And frankly speaking, I got really lucky with this trade. I don't think it was skill at all. I just so happened to be in the right place at the right time. So my average purchase price is about $26 for Slack, and I sold it at about $42, $43 after the deal was announced. The profit came down to about 62%, and my profit is approximately $600 US, give or take. With my CMC market portfolio side of things, it's currently worth about $68,810. I haven't made any changes, I haven't bought anything, I haven't sold anything. I made majority of my changes actually on the US side. So let me take you over to my stake portfolio. With my stake portfolio, it's currently worth about $27,000 US, including the buying power. And so that's approximately 36,000 Australian dollars. I do need to deploy the capital into this portfolio, so I'll keep you posted what I do decide to do with that. The main changes in this portfolio really is in offloading Slack and exiting that position completely, and also exiting my REITs positions. Now, the reason for exiting my REITs position also is I'm trying to reduce the amount of positions I have so that I can do more research on each of my high conviction positions so that I can just make life easier for myself, invest in companies that I have really high conviction of. Now, as usual, Dropbox and GoPro are not part of my portfolio. Now, I am not sponsored by Stake, but if you do decide to try Stake for yourself, I have left the link in the description box below. So, thank you so much for watching this video all the way to the end. I usually document my findings and my portfolio update in my Discord server first. So if you want to be notified of that and wouldn't mind being part of my fortnightly Q&A, consider supporting this channel via Patreon. Nevertheless, if you have learned something new, consider gently smashing that like button right there, subscribe to my channel and click onto the bell so that when I release future videos, you'll be the first one to know. Now, if you're in the mood for another video, I have put something on the screen that I think you'll really enjoy. Until next time, my name is David. Otto will always do the honors and see you very, very soon.